Good morning. Welcome to Forex In Four. Today is Wednesday, September 7th, 2011. All right. Well, this morning we're taking a look at the euro, and it looks like the markets have rebounded a little bit, although after yesterday's selling, that's not surprising. But one of the things we noticed yesterday was that the stocks in the U.S. Were able to rebound some after the massive selling we saw earlier in the day, and the Dow was down 300 points at one point, closed down around 100, which if you just looked at it at the end of the day, oh, the Dow's only down 100, that's not a big deal. So you can see that there's some appetite for risk out there, all right. But it's just that the problem is that most of the risk is coming from the eurozone, and that starts the morning off with such risk aversion that it's tough to get back to a place where people are willing to put some of those risk trades on. So we're looking at the euro here, and you can see euro's been down, and we reached under 140 yesterday, which it's psychological level, not necessarily anything significantly technical. But what we had overnight was we were talking about this German court was going to rule on whether or not Germany's participation in the balance was constitutional. And basically they came out and they said, they need to seek parliamentary approval and need to, it was basically a non-event. But, these are like these little potholes that you see that sort of pop up. And it's like lawmakers are... The difference between politics and economics is so diverse that it's the kind of thing where these guys just can't get out of the way of themselves, and it's unfortunate at times. But basically, Germany, the ruling in Germany has allowed Germany's participation in the bailouts. Will allow that to continue, which means the euro lives to fight another day. So you can see that we got this pop here. We're looking at the 30-minute chart, just above 141, got up to about 141 and a half before settling back down to just in the 140 range. Now, one of the things that has been a problem is that, German politics has been such that, these guys don't want to bail out these periphery countries, even though they benefit from the association. So it's going to be interesting to see exactly what happens there. But basically, euro lived to fight another day. So let's take a look at the Aussie here real quick. Aussie's higher as well. Okay, we got a nice bounce there. Australian GDP came in much better than expected. Quarter-over-quarter numbers, 1.2% versus 1%, which pushed the year-over-year to 1.4% from 0.7%. So that's a pretty decent figure. And as a result, Aussie's moving higher and also benefits from the risk-taking and risk appetite in the market. Just want to show you the pound here real quick. Pound's sort of muddling about, and it's drifting higher as we get some dollar selling. But numbers out of the UK not so hot. All right, industrial production lower than expected, negative 0.7 versus negative 0.4, and we also had home prices in the UK, which came in. A little bit lower than expected. So, things aren't so hot in the UK, and we're going to get the rate decisions tomorrow. Now, bear in mind that the Bank of England doesn't issue a policy statement with their decision. We have to wait for the meeting minutes, which is going to come out about 2 weeks following. But we are going to get the ECB rate decision tomorrow, so that'll be interesting. Now, overnight in Japan, they had their rate decision. They made no change to anything, which I guess is a good thing if you're somebody who considers that you're afraid of Japanese intervention, that kind of thing. But right now, I think that you have to be focused on the USD JPY pair, right, dollar yen, because that's really the driver of what's gonna cause policymakers to make decisions. All right, so euro yen can go down. You can have pound yen go down, but it's really dollar yen that they're watching. Sort of in the same way that the Swiss National Bank yesterday, when they came out with their peg, right, they were really concerned about the franc versus the euro. Okay, they pegged the franc to the euro 120. You didn't hear about them pegging to the dollar. Okay, it was the franc to the euro. So policymakers in Japan are watching the dollar yen pair. All right, not so much the others. So we're gonna have to keep an eye on that. Just show you a Swiss franc here real quick, and we can look at that euro Swissy pair. That's not the euro Swissy. Let's look at euro Swissy. Okay, you can see Euro Swissy sitting right up at that 120 level. All right, boom. That's where the peg is. We're going to see what happens there. And basically, that's really all we've got going on this morning. We've got Bank of Canada. They're coming out with their rate decision. My guess is they're going to do nothing as well. All right, they will issue a policy statement, usually the same rhetoric. We're concerned about inflation. We're looking for jobs growth. We're content to sit by the sidelines for now. And, we're just going to have to see sort of what happens in the market, because right now it's really all about, the risk coming out of the Eurozone with this, insofar as we can get, some relief to that crisis there. And these guys are sort of trying to make it up on the fly, and it's a little bit, I don't want to say they're late to the party, but I don't know what they're going to do at this point with levels that, as they are such, so high, and trying to get things fixed. I mean, it's kind of like what's going on here in the U.S. President Obama's going to come out with his job speech tomorrow night. The problem is that he's going to, go on this WPA style Franklin Delano Roosevelt New Deal scenario, but he's starting from a place where the debt's already so high as it is. I mean, people are saying, oh, well, when interest rates are low, you borrow money. Well, yeah, of course you do. When your balance sheet's clean. All right? You don't do it when you're underwater and double down, and this is going to be a problem. All right? You can sit there and say, well, Bernanke's keeping rates low, so we can keep borrowing money. And nope. Listen, these guys have been doubling down on bad policy for way too long. All right? There's no end in near, no end in sight, and, policy decisions right now are just a disaster. So I don't even know what to think about that. But, people by and large think this is going to be a non-event, and it probably should be. So anyway, that's what we're looking at this morning. We've got risk taking going on here. You can see gold selling off a bit. All right, back down to that. Ooh, wow, that was a nice sell-off. Gold pulling back here from that 1900 high yesterday. All right, you got oil. Oil's moving up. Wow, 87. Man, the volatility in these markets is just outstanding right now. If you're a short-term trader, man, you should be all over this. So, anyway, that's kind of what we're looking at. Don't get too excited with the long-term stuff right now because there's too much uncertainty. Keep it to the short term. Plenty of volatility. Lots of places to make money. That's all I've got today, folks. Good trading to all.